prison. It's a stunning reversal of fortune for the comedian once known as America's Dad. The court says the prosecutor who brought the case was bound by his predecessor's agreement not to charge Cosby. Well, the death toll is now up to 16 in Florida's condo collapse. 4 more bodies have been recovered from the rubble. Florida Governor Ron DeSantis says crews will continue their efforts to recover the 147 still unaccounted for.
I know there have been more identifications made today, but rest assured that that those folks are going to be working on that pile. And it's not going to stop, and they're going to get answers one way or another.
DeSantis says mental health professionals are helping families work through their grief. President Joe Biden and First Lady Jill Biden are planning to travel to the area tomorrow to meet with families and first responders. There is a new metro area leading the pack in worst traffic congestion.
For decades, the Texas A&M Transportation Institute ranked Los Angeles as having the most congested roads. But now the Newark, New Jersey region has the worst traffic in the country. Drivers there spent more than 494,000 hours stuck in traffic jams last year. In second place is Boston, followed by Houston and then L.A. Researchers found that the pandemic flattened highway congestion across the country to levels not seen in 4 decades, although traffic conditions are starting to get closer to normal by last fall. Truck traffic was barely affected by COVID-19, thanks to the huge jump in online shopping as Americans hunkered down at home. In Washington, Ann Cates, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. It is Wednesday. I'm Carol Master. My co-host Tim Stanovic is off. Joining me right now is Charlie Pellet of Bloomberg News. Charlie, you are a New Yorker through and through. And I bet you've been watching the race as we lead up to the final race, if you will, in New York City for a new mayor.
Indeed, and we could get some new numbers coming out today, according to the Board of Elections. Certainly this has been controversial, and certainly a lot going on here. New York City election officials thrust the race for the next mayor into turmoil yesterday after erroneously counting test ballots along with election night results, producing about 135,000 dummy ballots that skewed results of the city's first major test of a new ranked choice voting system. It's important, Carol, for our listeners across the country because they listen with great curiosity about ranked choice playing out here in New York, biggest city in America to try this out. And also, too, the focus of what happens with New York City's election, is especially with some of the progressive candidates, also has implications nationwide.
Well, yeah, it's a different way of doing it, right? So everybody's watching, and it was just not even 24 hours ago that we were talking about, okay, here's, atop that list, when you rank your top 5, here's what came out. And then all of a sudden, the New York City election officials coming out and saying, well, wait a minute, wait, what? We got to hold on because something maybe isn't quite as it should be. And as our reporting says, an inauspicious start for New York's new system of ranked choice voting. And so we're going to wait to find out a little bit more in this process. It's a new process. They're working their way through, but it makes you, I guess as a voter, I don't know, you're a voter here in New York City. Does it make you a little uncomfortable that there are these problems from the get-go?
Indeed. Anytime there are questions surrounding the electoral process, it does raise eyebrows without a doubt. Can I just say that Mayor de Blasio has weighed in on this, calling the debacle, quote, yet again, the fundamental structural flaws of the Board of Elections are on display. Should add that de Blasio has been a longtime critic of the BOE.
Yeah, exactly. Well, we're going to wait. It ain't over is basically what we're going to what we're going to say, and we'll look for some more information perhaps a little bit later on today. Charlie Pellet, thank you so much. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Trading mix, the S&P higher on track for another record on this final trading day of the month, the quarter, and the first half of 2021. The S&P 500 index, while it has been fluctuating, is still heading towards its fifth straight monthly advance. It's up more than 14% for all of 2021. A little change right now, trading in a very narrow range. S&P up 3, a gain of about 0.1%. The Dow up 190, up 0.5. NASDAQ on the minus side. The NASDAQ Composite Index down 18 now, a drop of 0.1%. NASDAQ 100 Index also lower by 0.1%. The Russell 2000 up 0.2%. Dow Transports up by 0.1%. 10-year yield 1.44%. Gold is up 0.5%, 17.69 the ounce. And West Texas Intermediate crude up 0.8%, 73.56 a barrel. Bitcoin now lower by 3.6%. Bitcoin 34,852. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Way below that, above 60,000 just a short time ago. All right, Charlie, thank you so much. Well, the fourth annual Heist issue of Bloomberg Businessweek magazine, it is out this week, hitting newsstands tomorrow, online and on the Bloomberg. One of the stories is also among our most read on the Bloomberg today. It's about the fall of the billionaire Gucci master. You know you want to know more. Here with more is Businessweek freelance writer Evan Ratliff. He is on the phone in Delaware. Evan, it is an incredible read, an incredible individual. First of all, tell us about who is the billionaire Gucci master.
Thanks. The billionaire Gucci master is a guy named Ramon Abbas is his real name. He went by Ray Hushpuppy online, or his handle was Hushpuppy. He was an Instagram influencer. He had a couple of million followers. He was known for his portrayals of luxury. He was always photographed in designer clothes, standing in front of Rolls Royces, Ferraris that he had bought, living a very opulent lifestyle. He lived in Dubai. He had been born in Nigeria, but he had moved to Dubai. And that was who he was for the world. He was a kind of a small celebrity. He hung out with other celebrities. But as it turned out, he is alleged to be also involved in some of the big cyber scams of the last few years.
I have to say, for those of us, of course, we're on Bloomberg Radio, but we're also on YouTube. And those who are on YouTube can see we're just showing some video of him running into a helicopter, sitting down. I think it was a helicopter, or maybe it was a plane. I think wearing a little Louis Vuitton next to him, and eating something on what looked like a private plane. What did he do that put him and gave him a place in the heist issue?
Well, his reason for being in the heist issue is that he is alleged by the U.S. government to have participated in some of the largest cyber scams of the last few years under the name business email compromise scams. That's what they're called. Mm-hmm. And he is alleged to be a person who moved large sums of money as part of these scams. And some of the targets of the scams were enormous, including they were trying to steal over $100 million from a Premier League soccer team. They were stealing from businesses in the U.S., law firms, other businesses, and they were tracking him. They eventually arrested him in Dubai, and he's facing trial in Los Angeles.
And I want to bring in the editor of Bloomberg Businessweek, Joel Weber. This is just a fascinating tale, but it's not a tale. It's true.
Yeah, I mean, that's the best part about the heist issue. And, Evan, this, as I tweeted earlier, in the history of the heist issue, this goes down as like maybe one of the very best heist stories. One of the things that captivated me about it was this idea that, BEC scams, which I know you just briefly hit on here, they're bigger than ransomware, and like no one wants to talk about them because they're such a big problem. Like put that in perspective. I mean, to think about this being bigger than ransomware is a little bit of a mind blower, right?
Yeah. I mean, it really flies under the radar a bit because it doesn't hit the news for one reason. Ransomware is very dramatic. Someone's being held hostage or being asked for money, and BEC scam is a more technical scam. We can go into how it works exactly, but part of the problem is that if you just transfer money to a scammer and you've been tricked into doing it, no company wants to talk about that. If you're a public company, you might have to disclose it if the number's large enough, but no one else is going to talk about that because then you lose the trust of your customers, of your suppliers, of your clients. It seems like you're completely incompetent if you're doing this, when in fact, it's a very, very clever way to extract money from companies.
Okay, so let's just talk about it a little bit more because it is so simple, right? That's the problem with it. It's like to defend against this. I mean, it's incredibly difficult because all it takes is somebody changing a digit. If you're doing this as a day job, all of these orders are flying around all the time. How do they pull it off?
So the way it works in its sort of most simplest form is it's business email compromise. So obviously they compromise an email, and that's usually going to be they're breaking into a corporate email account at some decently sized company. They want to hit someone mid-level or above, hopefully someone who's interacting with big payments. And they'll research the companies to try to figure out who that is. Once they're inside the email, they're just going to wait. They're just going to sit there, watch the traffic, watch what comes in and out, try to learn how the payments work. And then when a large invoice hits, let's say a law firm has an invoice for $1 million, then that's when they insert themselves. So they know exactly how to create a fake invoice that's going to look real. They'll immediately send it as a follow-up. They'll change the bank details to their own and say, here's a new invoice. Sorry, that one had the wrong bank details on it. And because they're coming from inside an email account, they have all the details right, they have the language right. Oftentimes people who are doing these payments they just overlook it. They're doing many of these a day potentially, or at least a week. And so they hit yes on the payment, they authorize it to the bank, and then it's immediately gone from the scammer's bank account to another one overseas, and the money becomes impossible to trace.
So Hush Puppy, let's bring it back to can I just say that again? Hush Puppy. Let's bring it back to Hush Puppy.
I want a nickname like that.
Evan, what is your name? Your code name? Did you have a code name for this story?
I did use a code name. I love Ray Hush Puppy. It's so enticing. I mean, it's a brilliant Instagram name because it conveys something that you just want to learn more about Ray Hush Puppy.
And there are these robes that he wears in some of the photos that we have, and it says Hush Puppy on the back. For the record, I was like, I want a robe that says the heist issue. Like, I want that robe. So Evan, let's talk more about him because one of the most fascinating elements of this story is that Hush Puppy came from Nigeria and Lagos, which has this history of being a place where Nigerian princes operated. So how did he come up and how did he break out of all of that?
Yeah, he grew up in Lagos. I mean, he was, by his own account, he was poor growing up. He struggled. He actually had a sister who died of typhoid, by his recollection, because they couldn't pay the medical bills. So he was someone who very explicitly was trying to get out, and he saw the wealthier parts of Lagos, and he aspired to that. He dreamed of that. He was always interested in designer brands, and so he did escape, and he eventually went to Malaysia, and that's when he started building, his influencing. And, the crimes that he's alleged to commit, these business email compromise scams, a lot of them do come from Nigeria, but it's a bit of a double-edged sword because, Nigerians have been accused of these scams for many years when in fact they come from all over the world. So there's a sort of stereotype that precedes Nigerians that then, he reinforces, and it becomes this sort of vicious circle when in fact, obviously there's a Nigerian tech scene, there's all these people who are very upset that he is, in fact, reinforcing that idea.
Well, to get every juicy tidbit, check out the story in Bloomberg Businessweek magazine. It's online and at Bloomberg.com. It's incredible. Evan, thank you. Evan Ratliff, freelance writer at Bloomberg Businessweek, joining us on the phone along with Joel Weber. For those of you in New York, D.C., and San Francisco, Businessweek continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Miller. We move into the final hour of trading on this Wednesday, June 30th. It is the final trading day of the quarter, of the month, and the first half of 2021. The end of one of the best first halves since 1998 for U.S. stocks is being marked by small moves and slow trading. Case in point, narrow range for the S&P today, up now by 3 points, up less than 0.1%. The Dow's up 187, up 0.5%. Nasdaq is down 18, a drop there of 0.1%. As we wrap up the first half, worth pointing out that so far this year, the S&P's up 14.3%, Nasdaq up 12.5%. Who would have thought only a few weeks ago we've got the Dow up 12.6% year to date. 10-year up 7/32, 10-year yield right now 1.44%. Gold up 0.4, 17.69 the ounce, and West Texas Intermediate crude up 0.8%, 73.58 a barrel. Dallas Fed President Robert Kaplan says the latest ADP employment report is in line with forecasts, and he's expecting continued improvement in the labor force. And in an interview with our Michael McKee, he also said price pressures should remain transitory.
All I've been saying on inflation is there are parts of this price surge that'll moderate used cars prices, lumber prices, but they're also, what we're seeing in our work is we're seeing a broadening of price pressures that are rippling into a broader range of items. So semiconductor shortages first affected used cars. Now they're starting to affect more broadly consumer products.
Airline stocks are trading higher, even as fears of the more contagious Delta variant continue to spur tourism curves. UAL up by 0.2%, American up 0.6, Delta Airlines up 0.8. I'm Charlie Miller. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I am Carol Masser. Tim is off this week. Well, today virtually was the Bloomberg New Economy Catalyst event. It highlighted innovators, visionaries, scientists, policymakers, and entrepreneurs accelerating solutions to today's great problems. One of them is Sarah Menker. She's a former commodities trader who worked for Morgan Stanley. She took what she saw, she learned from it, and she founded Grow Intelligence, which gathers tons of data and then uses AI and machine learning to tackle lots of things, including some really big problems. One of them, food insecurity. And I caught up with her and talked about it, specifically what her company does in using AI to look at data and solve that problem.
Grow Intelligence is a company I founded in 2014, and it really is a story at the end of the day that tells the story of what on earth is going on. And I say that because, oftentimes we use data to tell stories. And oftentimes when we think of Earth, we think of satellite images just showing us pictures of our Earth, whereas Earth is sort of this interplay between our Earth's actual ecology and our human economy and the interrelationships between the two. And what we've done is we've built a data platform using artificial intelligence to capture sort of data around the world about our Earth, as well as our human economy, connect the dots and start to tell stories about things like, where the trajectory of food security is going, or how to become better resilient to climate change. And really, it's a company focused on tackling these two major problems, which is essentially around food security and climate change at global scale.
Huge issues, right, that obviously impact everybody. Data collection can be good, it can be bad, right? It can be biased. So tell me how you go about it.
Yeah, it's garbage in, garbage out.
Exactly.
And so we say curated by human intelligence, scaled through artificial intelligence. And I think this is a really important part of how we do our work, but how AI should be done, which is that you need domain experts, you need humans that first actually assess the data in the very early days. Because as you're collecting data and you're getting data, we get data from over 45,000 different sources around the world, and it comes in many languages.
Private, public, everything.
Governments, private companies that we license from, trade organizations, all sorts of, and then they come in many different formats and languages. And you need human experts initially that sort of do the assessment of the data, that document it, that map the definition of it, that help create the dictionary. And then you start to use artificial intelligence to scale the mapping of that knowledge to better understand the interconnectedness that exists through the data. But it always really starts with the human intelligence component that helps with sort of the curation in the beginning.
Right.
And then you let the machines take over. And this makes your predictive models work better. It makes the knowledge graphs, the systems of sort of how we understand today work significantly better as well.
It's a diverse group. I know, speaking many different languages.
Very. Yes.
But it's good, right? Because you're dealing with a global issues.
Yeah. I always say, your team has to resemble the world it's attempting to model.
I can hear your commodities background playing into this. What was it about your background in commodities and being in the Wall Street financial community that kind of got you to where you are today and said, all right, there are bigger issues, bigger problems. We need the tools to tackle it?
Yeah, I mean, it played a huge role. I was an energy trader. And in the early days of sort of energy trading, if you had an oil producer that would come to the market and say, I've discovered oil and I need to now produce this oil and I need some money for it. So therefore I need to sell it forward to you. And selling oil 2 years forward used to be a struggle. By the time I left, oil producers, gas producers, et cetera, could sell oil 10, 20 years forward, long before it was outside the ground. Financial markets enabled that. And, for markets to develop, you need trust, you need baseline understanding, and then people have their relative competitive advantage, right? Because what that does is it drives capital into markets, and capital drives innovation, and innovation drives very long-term change. Renewable energy, shale oil, shale gas, all of these technologies we take for granted had to be funded some way. And I had seen that agriculture was, and still is, frankly, where maybe energy markets were in, if I'm being kind, like the early 90s.
So they were behind, right?
They're very behind.
Right.
And so, when you think of what happened in COVID last year, during COVID, and all of the shocks the system experienced when, people were saying, are we running out of meat? Why are, certain things just flying off shelves? And is there a shortage? That was really a function of how short-term the food markets actually behave, meaning decisions are still being made day to day, week to week by grocers. And if you take the most liquid agricultural market in the world, which is corn in the US, you're lucky if you can sell it 2 years forward.
And that was Sarah Manker. She's founder and CEO of Grow Intelligence. This is a company that she founded after being a commodities trader at Morgan Stanley. They gather tons of data from global sources. They use it using AI and machine learning, and they address things like you heard her talk about food insecurity, one of the major problems that a lot of countries are dealing already. We saw it through the pandemic where companies and countries specifically, if they were a producer of some food item, a lot of them stopped exporting because they were trying to protect their own citizens. So she is looking at that and working with clients. And her clients, I've got to say, are from all walks of life. They are food producers, they're food suppliers, they're governments, and they're also the financial world, because increasingly we are seeing financial instruments, just like we've seen in the ESG world generally, that are looking to create investment vehicles that are tackling some of these big problems like food insecurity. And of course, already we see it with climate change. So again, Sarah Manker, founder and CEO of Grow Intelligence from the Bloomberg New Economy Catalyst event. You can see that entire interview and more like it at bloomberg.com/new-economy. These are 31 people that we've identified at Bloomberg New Economy that are catalysts, that are charting the global course out of the pandemic and really looking at creating a brighter, more sustainable future. Some of them are names you know. We mentioned formally or earlier the chairman of Moderna, that individual also at part of this event. But a lot of them are names you don't know, but they're doing some incredible work. So I highly recommend you check it out online and look at those conversations. All right, let's get back to world and national news. What is going on? Over to Nancy Lyons in our DC bureau. Hi, Nance.
Hey, Carol. Bill Cosby is now a free man. He's been released from prison after Pennsylvania's highest court vacated his sex assault conviction. The court said the DA violated a previous prosecutor's agreement not to prosecute Cosby. The opinion said the only remedy was to discharge Cosby from prison and bar any future prosecution on the charges. Janice Baker Kinney says she was one of his victims and was assaulted when she was 24.
So many women have told their truth, and this serial rapist gets to go home today is just stunning to me.
Cosby has served 2 years of a 3 to 10 year sentence. President Trump is visiting the Texas border, meeting with local officials there about the illegal immigration border surge. He says Democrats are playing games and blaming Republicans for that surge. He says it's a reversal of the progress he made.
We built almost 500 miles of wall despite 2.5 years of lawsuits, litigation started by Congress, Nancy Pelosi and the Congress. They sued us for everything.
Trump says President Biden has enacted the most radical open borders agenda imaginable. New York prosecutors are expected to file criminal charges against the Trump Organization tomorrow. People familiar with the matter tell Bloomberg, in addition to the organization, tax-related charges will also be filed against CFO Alan Weisselberg. The Manhattan District Attorney's Office has been investigating the Trump Organization for 3 years. Any charges against Weisselberg would raise the pressure on the longtime loyal Trump aide to turn on his boss. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I want to get right to it. 2 interesting stories. One is from the financial community. Charlie Pellet is joining me once again. So, Charlie, Citigroup, they are doing it differently when it comes to working from home or coming back to the office. They have basically joined some of the rivals like a UBS, and Citigroup is touting its flexible work policies as a tool that will offer, they say, a competitive edge in recruiting and retaining top staff. I've talked with a lot of recruiters and a lot of corporate watchers and leadership watchers, and they say those CEOs that give flexibility to their workers are going to get a more diverse and probably better talent pool.
Yeah, well, Carol, I just wonder back in February, March of 2020, if we ever dreamed that it would show that it would shake out like this with such divergent opinions among banks. I mean, I don't know about you, but on our last day, it was a Friday, like much of America.
Friday the 13th.
Friday the 13th, I was all set to leave the office, and, you know, I figured 3 weeks tops I'll be out. 3 weeks tops we'll be done, and we'll be back in the office. And then the question is, how do you get back? How do you get people back to the office now?
Well, there's a lot of CEOs say that you don't have to come back. And what's really interesting is I think there's a divergence between largely the financial community that is saying we want you back versus the rest of the corporate world, who are, it looks like, embracing more flexibility, just based on a bunch of the conversations and roundtables I've been doing. In the meantime, got to get to this story. It's about a Japanese maker of semiconductor equipment. It's Disco Corporation, and they've got a novel approach to remote work, Charlie. They say those who choose to stay home pay the colleagues who brave the commute to show up in the office.
Yeah, I wouldn't be doing this conversation with you because I'd be paid big bucks by coworkers so that I would, you know, not.
You'd be on an island in the Caribbean. You would have made so much money.
You know, I'm delighted to show up in the office. I don't have a problem with it, but it is a fascinating approach. And basically, what they're doing, to make a long story short, you can find this on our website. What they're doing is they're taking inspiration from video games. I pay you to do the right thing.
That's exactly what they're doing. And they talk about how they couldn't keep their workers at home, and so how they kind of came to this. Anyway, as Charlie said, check it out online.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Good afternoon, Charlie. U.S. stocks are mixed today with the Dow outperforming. Dow's currently up 196 points. S&Ps are up 4. NASDAQ declines by 15. The U.S. 10-year yield at 1.45%. Gold is up 8. Bitcoin is down by 4%. And among the main 11 S&P sectors, leaders were energy and the industrials, while real estate and utilities were under pressure. Leaders to the upside in the Dow, Walmart and Boeing. Intel and Nike led to the downside. And after earnings, Bed Bath & Beyond...
Hello, traders again. It's time to place a order to buy Bitcoin. If you're looking to buy Bitcoin, here is your chance. I'm looking to buy at 34,674. Okay, order placed to buy Bitcoin at 34,674. If you're looking to trade Bitcoin, copy this trade, follow me, and I will guide you through until the end of this trade. If we'll hold overnight, that's okay with us. If you can't afford, it's better, of course, wait until next day. But for time being, we trade on margin. So you better understand that if we trade on margin, broker will charge us overnight price for holding overnight pairs, securities. So good luck, guys. So if you want to trade Bitcoin, we already placed an order. I'll speak to you later, guys.
On the surface level, a company that is in bankruptcy, shareholders are more than likely to be completely wiped out, getting absolutely nothing for their investment. And so to buy shares of a bankrupt company is not always the best trade. But we've seen some situations where that hasn't been the case, and it's becoming more and more frequent, even though this is not the norm. Hertz is probably the best example of this. A year ago, the shares, when you mentioned when the Reddit traders first started getting into the name, the shares were around 550, and that was considered huge, a big gain. And today, just to put it into context, the company is exiting, and the shares are valued, some analysts say, around $14. So that's well over double where they were a year ago.
Have we started trading yet on Hertz?
So the shares are trading right now.
Okay.
I have them up on my screen. They're around $9. They're up a bit. They almost got to about 10, but we'll see the post-bankruptcy trading more likely tomorrow.
Okay.
The company, its process will be finishing or culminating, let's say, today.
Okay, that's what I thought. I was trying to understand the trade a little bit here as I looked at my Bloomberg. It is, it comes down to pure math, right, in terms of these Reddit traders and how they benefited.
So it does, but it also comes down to the business, too. We can't talk about this story without talking about the boom in travel that we've seen. This company, when it filed for bankruptcy, it was because no one was renting cars. There wasn't the ability or the need for car rentals at the time. Now that changed pretty dramatically as folks started renting cars to take whatever vacations or time away that they could without having to fly or do other things that were limited. So we saw a rebound, which has only continued. And then we also have to talk about the price of used cars that has also risen. Same reason. People are now buying up cars because they're moving out of the city into the suburbs. They want cars to travel, to get between places. And then there's also the shortage of new cars that are getting put into the market. So Hertz actually benefited from selling a lot of its fleet at top dollar, and it used that cash to pay down debt, which has just benefited the company and its investors.
Right. The pandemic just did a 180 for this company, or created a 180 for this company, and did change the fundamentals.
Absolutely. I mean, at the beginning, Carl Icahn was the big investor behind Hertz. He backed out right as the company filed for bankruptcy. He wanted nothing to do with it. And now we've seen this amazing snapback, the road to redemption. Pardon my pun.
No, it's perfect. Nice pun. I really like that. Kudos. Hey, but when you look at the balance sheet, it's a different company?
So, yes, it definitely is. This company is emerging with less debt. It also has an influx of equity, and the sponsors, Knighthead and Certares, this group that also included Apollo, some of the biggest names on Wall Street. They stepped in to support the company. They saw the value, they saw the recovery, and they wanted to be at the forefront. And they are behind the business 100%. I spoke with the head of Certares, who said that that firm is planning on investing in Hertz and improving its infrastructure, its technology, so that it has a stronger footing going forward.
It is just, staggering. I always often kid on air about Harvard Business School case studies, but this is a great one. Who would have thought, right? First of all, nobody would have predicted the health pandemic, but who would have thought how that would have changed dramatically a company, a brand that we've known for a long time, and it's gone through various iterations over its history, right, in terms of consolidation in the industry and people being interested, or activist investors. But here's the outcome. And I guess the future is still unknown. We'll see what life is like post-pandemic.
The future is unknown, and we'll be following this situation very closely.
Kat, great story and a great read. Kat Doherty, she's high-yield distressed debt and bankruptcy reporter at Bloomberg News, on the phone from Boston. Some sad news. We want to point out that just crossing the Bloomberg, the family of former Defense Secretary Don Rumsfeld telling us that he has died at the age of 88. Of course, he was Secretary of Defense from 1975 to 1977 under Gerald Ford, and then again from January 2001 to December 2006 under George W. Bush. So again, Don Rumsfeld, former defense secretary, passing at the age of 88. All right, you are listening to Bloomberg Business Week. Coming up, we're going to focus in on the markets. Dave Wilson's going to come by with his chart of the day, looking at one of the big FANG names, and we'll get into that. And of course, then we will count you down to the closing bell on this Wednesday. We're kicking off almost a new quarter and a second half. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So TikTok, in just about a minute or so, you're going to find out about the latest chart of the day from our own Dave Wilson. We'll also get the song of the day. And this time around, just a little hint, he's talking about one of the fangs. We'll get to that in just a second. First up, though, let's find out what's going on in the markets. We've just got about 29 minutes to go. Charlie, we wrap up the quarter and the first half.
Indeed, and we have got the Dow, the S&P, they're both higher. S&P at a record, NASDAQ on the minus side. The S&P has been fluctuating, though, on track towards its fifth straight monthly advance so far this year. Worth pointing out the year-to-date numbers of 14.3%. To give that some context, by comparison, the Dow up 12.6%. NASDAQ close to outperforming the Dow, up now by 12.5%. 10-year yield 1.44%, 10-year up 8.30 seconds. Gold up 0.5%, 17.70 the ounce. And crude West Texas Intermediate up 0.7%, 73.53 a barrel. The NASDAQ 100 index lower as well, down 0.1%, while the Russell 2000 index up by about 0.2%. The end of one of the best first halves since 1998 for U.S. stocks is being marked by small moves and slow trading. Again, the S&P up now by 3, up by just about 0.1%. Moderna's chairman has vowed to keep testing the drug maker's COVID vaccine against variants and advised, quote, against putting our guard down as new mutations continue to emerge. Lauren Sowers, an assistant professor of emergency medicine at the Johns Hopkins Bloomberg School of Public Health.
I do think that as vaccine coverage increases and we have these great vaccines, which is incredible, the new variants become less worrisome. So the more we can uptick that vaccine coverage globally, the less we have to worry about the new variants.
And Lauren Sowers with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we keep track of, Pfizer, little change right now, flat on the day at $39.10. Its German partner BioNTech, the ADR is down 1.8%. ADRs of AstraZeneca down 0.6. Moderna shares up 0.2%. Johnson & Johnson up 0.1%. So again, 27 minutes to go until we wrap up the first half of the trading year with the S&P at a record up 3, up 0.1%. I'm Charlie Hellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, just great setup as we count down to the last last few minutes, I should say, of the first half. Let's get to the chart of the day. This is Bloomberg. With this one.
Oh, definitely. Absolutely.
I can totally see it. I have no. You're going to say AC/DC?
No, but you're sort of in the right ballpark anyway. It's
Black Sabbath? No.
Deep Purple. Deep Purple. Speed King.
Nice.
There you go.
Speed King?
Speed King.
All right.
That's what Facebook is.
Okay.
It's the Speed King when it comes to $1 trillion in market value.
It came out of nowhere, it felt like.
Yeah, absolutely. And when you compare it with other companies that have crossed that threshold, you can understand why, at least other U.S. companies. Because you look at Facebook, it took a little more than 9 years from its initial public offering to get above that $1 trillion mark for the first time earlier this week. Now, it slipped a bit below it. Nonetheless, the milestone is what it is. And just to give you a sense of what kind of accomplishment that is, the chart compares Facebook with the other members of that $1 trillion club. Alphabet, the owner of Google, needed more than 15 years to get there. For Amazon.com, it was 22 plus years. And then you get into the 30s when you talk about Microsoft and Apple. I mean, they both went public in the 80s, and they didn't get above $1 trillion until a couple of years back.
37 years for Apple. That's a long time.
Yes, it is. I mean, and let's not forget, this was a company that had relatively little value for a long time. It's really, the move into digital music players and then smartphones. That's what's caused market value of Apple to, take off the way it has, and that can go above not only $1 trillion but also $2 trillion.
What does this say to you, someone who's watched the markets for a long time, especially the type of companies that we're seeing hitting that $1 trillion market value mark?
Well, I mean, when you think about Facebook relative to the others, you're talking about, a pure social media company. I mean, Alphabet certainly made its trillion on the internet, you might say. Facebook even more so. And given that it's less than a decade, you have to wonder how much staying power there's going to be. Right. You think back to the 90s, and Cisco Systems was at one point the world's most valuable company. That didn't last very long. So, moving forward, the question is going to be, is what we're seeing now sort of a reprise of the 90s, or is it something more lasting in terms of valuation? And by the way, folks, if you want to see this chart, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's a great chart, especially when you talk about how quickly some of it happened and how it took longer for others. I think of a conversation I had with Kathy Wood over at ARK Invest, and they had gotten out of their position of Apple, and she's like, I'm already thinking about what's the next innovative companies, what are the, what's the next Apples, and so on and so forth. So I do wonder if we go 5 years from now, 10 years from now, do these market caps hold? Are they more or are they less?
Yeah, I mean, are these companies able to sustain the business they have, or do things kind of move on as, technology evolves, as the internet evolves? I mean, they're all, sort of fascinating questions.
Always fascinating, too, is your stock of the day. What do you got?
Wow.
Wow.
Yes, that's the ticker. It's a company called Wide Open West. They're in the cable business, and they decided to sell a total of 5 service areas, 2 deals totaling about $1.8 billion. And when they're done, the company's going to cut its leverage ratio in half, which means they'll have a whole lot less debt, which is always an issue in the cable business, it would seem. Right. The shares were up as much as 17% at one point. They're higher by more than 13%. But at their high of the day, stock was at a record.
Stock almost doubling this year.
Yeah.
It's pretty remarkable, and of course, hitting a high. That makes sense. Okay, ticker is WOW, and we can find Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Saving you 20 seconds as we get ready for the second half. Any thoughts for our audience?
Well, just look out for those second quarter earnings. They're going to look really great relative to last year, but let's not forget, last year was all about the pandemic, and a whole lot of businesses took hits.
Perspective. We've got to remember. JP Morgan, by the way, they're going to report their earnings at 7 a.m. Wall Street time on July 13th, so it's just around the corner. Dave, thank you so much. Have a great evening, and be sure to check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time, Facebook, LinkedIn, and on Twitter. All right, let's get back to World and National News. Nancy Lyons, take it away.
Thanks, Carol. Bill Cosby is out of a Pennsylvania prison and now back at home. His release came quickly after the Pennsylvania Supreme Court vacated his sexual assault conviction, ruling that prosecutors had violated his rights by breaking an earlier agreement made with prosecutors that his testimony in a civil case would not be used against him. Victoria Valentino says she is one of his victims.
This is a man who has no conscience. He has no sense of remorse.
Valentino says she's deeply distressed about what she calls, quote, the injustice of the whole thing. President Biden is promising governors of western states that the federal government will help them confront record heat and a surging wildfire season. Bloomberg's Irv Chapman reports.
The president said climate change is making firefighting virtually a year-round occupation.
Already about 9,000 firefighters deployed across the region from California to New Mexico to Utah and Nevada, and it's only June. We're going to make sure that we have enough firefighters on call who are trained, equipped, and ready to respond for all this fire season.
The president said federal firefighters have been underpaid and would henceforth make at least $15 an hour with a 10% bonus. and satellite technology would be used to spot fires early before they spread. In Washington, Irv Chapman, Bloomberg Radio.
Former Defense Secretary Donald Rumsfeld has died. His family issued a statement today saying he was surrounded by family at his New Mexico home. He was 88. He directed the planning for the war in Afghanistan following 9/11. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much for that update. All right, joining me once again, Charlie Pellet of Bloomberg News. Charlie, story on TikTok by our Monica Gregg. And it says TikTok, you know who they are, the short video social media platform, very popular among the kids, the teens, saying it removed more than 7 million accounts belonging to children under the age of 13 during the first quarter, taking a significant step in enforcing the required age of users on the app.
And not just among kids. Perhaps if you're not on, just sort of explain there's it's an amazing way to spend a lot of time on TikTok. I mean,
do you get lost? Do you go down that rabbit hole? Sounds like you do.
It's unbelievable.
Come on, you're among friends. You can tell us.
No. I even got like my own little TikTok video out there too. But that's neither here nor there. However, 7 million accounts. But this is why we're talking about TikTok. It is now going ahead to take a significant step in enforcing the required age of users on the app. It has been taking down millions of accounts that belong to kids.
Yeah, and in the United States specifically, internet sites are required to obtain parental permission before collecting data on children under the age of 13. Many kids, though, fudge their age and create accounts anyway across social media sites from Instagram to YouTube. I mean, to be quite honest and fair, it's pretty easy to do that.
Yeah, I was just wondering if I was charged with enforcing this, how would I do it? I don't have a clue. I don't know how they could possibly verify somebody's age.
Well, maybe you have to get your. I don't know either. It's like when you search on something that's alcohol related, and they're like, put in your birthday. I'm like, all right, I lie about my age anyway. I'll do it here. It's just.
Man, that's not where
I'm just kidding. I'm just kidding.
29.
No, but we do know regulators, certainly in the United States, and especially if you go over in Europe specifically, they're getting harder on the social media sites, especially when it impacts kids specifically under a certain age. Their exposure to information, their exposure to advertising, there's a lot of things that they're concerned about.
Carol, back in 2019, TikTok got hit with an FTC fine, $5.7 million, a record at the time for unlawfully collecting children's data, including names and email addresses.
I'm 26. How old are you?
Yeah, I'm young too.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
First half of 2021. Right now, right to the numbers, the S&P up 8. We are at a record 4,300 right now on the S&P, advancing by 0.2%. The Dow also at the best level of the day, up now by 224 points, up 0.7%. NASDAQ has reduced its loss now to just 2 points, down less than 0.1%. We will see a record today if we close higher on the S&P. Year to date, the S&P 500 index up by 14.5%. 10-year up 9/30 seconds. 10-year yield 1.43%. Gold trading higher by 0.6%, up $10 the ounce. Spot gold at $17.71, and West Texas Intermediate crude up 0.7, $73.50 per barrel of WTI. The end of one of the best first halves since 1998 for U.S. stocks is being marked by small moves and slow trading, but nonetheless, we are looking at a record right now. The S&P, again, up 8, up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just about 10.5 minutes left in today's trading session. It is time for the drive to the close. Let's get to it with Managing Director and Senior Portfolio Manager Margie Patel over at Wells Fargo Asset Management. $590 billion in assets under management. She's with us once again on the phone from Boston. Margie, nice to have you back here on Bloomberg Business Week on Bloomberg Radio. So it is an interesting week. We've had very tight ranges when it comes to those major equity averages. Is this just a case of pre-earnings, pre-jobs report? How do you see it?
Yes, it's a week of macro shifts back and forth. We've had the value sector sort of play out when we had a little scare about interest rates moving up. Now we have the 10-year well under 150, and so it looks like the baton has passed back over to the growth sector and some of the tech names.
All right, so are there any long-term plays that you should be making right now, or do we need to wait to get through earnings, get into the second half a little bit, maybe even wait till the fall to get a better indication of maybe what the Fed is up to? Our own Mike McKee talking with the Dallas Fed President Kaplan and talking about, he's looking for maybe a tapering happening sooner rather than later, maybe even later on this year.
Well, they've talked about that, but I think that overall they are really committed to the same course they've been on, which is keeping short rates anchored pretty near zero, continuing to buy securities in the long end, and I don't think they're going to waver from that policy. They continue to feel inflation is transitory, and as long as they feel that way, that's what's going to determine monetary policy, and says the markets will continue to move up.
All right, so how do you play it right now?
Well, I think it'll be interesting at mid-year. I think that what you're seeing with is switching over a little bit more to growthy names is concern that the cyclical names have played out and their growth will start to diminish in the second half. So what I'm going to be looking for is what are we seeing, especially from the more economically sensitive companies? Are they beginning to look for a slower earnings growth or a little pinch in their margins because of cost pressures? Or will we continue to see things looking great across the board and another strong quarter and a strong rest of the year?
How do we, though, at some point, maybe we've got to remember we fell off a cliff. We're now bouncing back or climbing up that cliff in a big way. And that's the distortion that we are seeing in certainly the economic data points. And the markets are trying to find their way through it and kind of get through that data, filter through the data, and understand and get some clarity. When we get on the other side, is it going to be, though, a similar environment to where it was pre-pandemic, where there was kind of okay growth, that just kind of kept muddling along, but it actually turned out to be a fairly decent environment because of the low rate environment? environment for the equity markets.
Yes, that's what I think we'll see is continued growth in the moderate range, and I think what you're seeing really is a pickup in growth globally, and we aren't just where we were before the pandemic, but in some indicators like consumer wealth, we actually have far exceeded the levels that we had pre-pandemic. So in some ways, the economy, unbelievably, is even better off than it was before we had the COVID crisis.
Right.
So that's a great foundation to keep moving forward.
Right. Consumer wealth has far exceeded if you happen to be part of that group. As we know, at the same time, there's incredible gaps in this community, and it's something that the Federal Reserve, led by Jay Powell, increasingly is looking at that. How might that impact his moves when it comes to policy, in your view? We know they have the dual mandate, but Jay Powell and company and others have talked about the importance of, when we see the job market come back, that it's not just white-collar jobs or the high-end jobs. It is much more diverse and impacts more of the labor market spectrum.
Yes, and actually we have already started to see that. We've already started to see the increase in the bottom, say, two quintiles of the marketplace, actually, as far as those wages actually moving up greater. Of course, they're a lot lower than the top quintile, but still we're actually seeing that turn, and I think that's perhaps somewhat a shortage of labor. I think it's also reflecting globally that the pendulum has swung back away from some of the emerging markets like China, and it will really benefit our workers long term that we're not having our wages depressed by very, very cheap imports. So I think it's good all around fundamentally.
One of the things that stood out from Michael McKee's conversation with the Dallas Fed president, Robert Kaplan, is that he did talk about the virus and the vaccine, saying we still have to weather the virus specifically. And he did say he's watching the Delta variant. How many conversations around the Zoom table or the virtual table at Wells Fargo do you folks talk about specifically, maybe what is next when it comes to COVID-19, and particularly the Delta variant and the impact it could potentially have on our society?
Well, the conversations that I've had and what I've heard from companies are really that their concerns about COVID, they always throw it in there, is really very, very much diminished, just because a law of large numbers says that more than half of people, at least in America, have gotten at least one of the shots, so that even if you have an impact from the Delta variant, its impact is going to be relatively small. The other fundamentals are so strong, I think that says the economy is going to power ahead. In fact, it looks, if anything, like we have a labor shortage. So that says that the outlook for labor is going to be very good.
How quickly does that labor shortage right itself? As our Michael McKee reminded, it's not new jobs that are being created. We're basically, filling the existing ones that were lost because of the pandemic.
Well, that's all fine, because it still says every month more and more people are getting hired and the average wages are moving up. So that's a great base to build on. And then I think as we move on, we'll start to see new businesses, new jobs be created.
And so what keeps you up at night in terms of when you look at the investment markets?
Well, I would say that we feel pretty optimistic.
Yeah,
if we would see after mid-year, if we would see a dramatic slowdown, because it turns out that growth is really being pulled down, maybe from COVID around the world. Maybe China's growth, which has slowed a tiny bit, decelerates, and that pulls down global growth. We're not worried at all about inflation. We agree with the Fed, maybe not all their policy, but we think that we won't see inflation continue at this pace for very long. We think inflation will peter out in the second half of the year.
Why?
Why? Because I think that, number one, globalization is always deflationary. Technology is deflationary. And really, when you look at wages are going up 3.5%, but a lot of what people spend their money on, cars, housing, have actually gone up 15 or 20%. So that says that consumers may, in fact, have their real wealth a little bit pinched as we go forward from these input pressures. So we think that ultimately we'll see declining inflation back to that 2%.
When it comes to the fixed income market, is there a part of the market that you like at all?
Well, we still like high yield, although it really isn't high yielding anymore. You're talking 3 to 4%, most bonds trading at a big premium. but default rates have gone down to between 1% and 2%. So it's a market that doesn't seem to have a lot of risk. As long as the economy's growing, the Fed keeps liquidity flooded, we think it's a way to at least get another 1 or 2 percentage points more than higher quality securities.
All right, we're going to run. Hey, Margie, thank you so much. Counting us down to the closing bell on this Wednesday. Margie Patel, she is Managing Director, Senior Portfolio Manager at Wells Fargo Asset Management. They've got about $590 billion in assets under management. Joining us on the phone from Boston. We've just got a few minutes left in the trading day, and as we do, we see equities, particularly the S&P and the Dow, taking a leg up. Still just up about 8 on the S&P 500. Dow up 236 points. NASDAQ still a little bit lower. It is down just about 15 points. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the closing bell, wrapping up the first half and the second quarter right here on Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the month, and the quarter. Romaine Boston, Caroline Hyde, Taylor Riggs, counting you down to that closing bell. Here to help take us beyond the bell, our global simulcast. Carol Massar joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. Carol, right now, looking at a 5th straight monthly gain on the S&P 500, right. 5th straight quarterly gain.
Pretty remarkable, but we've been kind of just getting there slowly, certainly this past week. If you think about the S&P 500, I've said it before this week, what a tight range on that index, about 0.3%, 0.33 to be exact. And if you look at the S&P 500, Caroline, again, it's kind of an even split in terms of gainers and losers.
Although I think last time I checked, every single energy company had been higher. So there's a commodity spin to all of this. But when you look at where we're coming up to the end of the month, the quarter, the end of the first half, Bloomberg Commodities Index has been on fire, but gold pulling back, Bitcoin pulling back. So it hasn't been too pleasant for everyone, Taylor.
On fire, some of those commodities. It was unbelievable. And Carol, we got some interesting comments as well from some of the earnings that we got this morning as we're wrapping up where we are in terms of some of the labor shortages, some of the shipping shortages. We've heard from Constellation, General Mills, Bed Bath & Beyond, hoping that we're through some of the worst of some of these shortages that we've been seeing, hoping that that eases as well into the second half of the year.
Right. First half of the year, though, the best performers, as Caroline mentioned, those energy names followed by financials remain.
And just to your point real quickly that you were making there before, Carol, I mean, on a quarterly basis, you're talking about close to 400 of the names in S&P 500 in the green. Similar story on a year-to-date basis. But when you look at it on a monthly basis, it really gets home to your point here. Barely about half of the S&P 500 holding their heads above water, at least on a monthly basis. Here are your daily numbers right now. S&P 500, 4297.32, call it 4,300 if you will. That's up 0.1% on the day. The NASDAQ composite in the red on the day, 14,503, down about 0.2%. Dow Jones Industrial Average up 0.6%. That's about 210 points. And your Russell 2000 going to end the day up fractionally higher by about 2 points, 2310 and change.
And it's one of the best first halves since 1998. But we've got to keep in perspective that, everything fell off a cliff. So we are bouncing back, still recovering. And as those Fed officials like a Robert Kaplan, we'll talk about him in just a moment, continue to remind us that we're still recovering from the fall off that we saw because of the pandemic, guys.
Let me tell you, Carol, what is recovering. It is a year-to-date board of a one-day board of the individual sectors, but it looks eerily similar to a year-to-date board as well. Energy on the day, we're up 1.3% on the year. Also the best performer, you're up 43%. Banks as well on the day, we're up 0.8% for the year. We're the second best performer, you're up 28%. So really interesting that some of the leaders today continue to be some of the big leaders that we've really seen all year long. We take you down to the losers. This is interesting. It's some of the bond proxies. We've seen bond yields really, really come down today and for the year, but it's media, it's software, it's hardware equipment, it's also real estate. Some of those bond proxies, Carol, that are off anywhere from 0.3% to 1%.
A couple headlines crossing the Bloomberg as Romaine broke down those numbers. S&P 500, as he mentioned, rising for the 5th straight quarter, longest run since 2017. NASDAQ 100 gains for the 5th quarter, its longest run since 2018. So it's been quite a quarter, to say the least. All right, let's go through some of the gainers. I got a bunch of chip stocks on my radar, including Micron Technology. Ahead of earnings, we're going to get their numbers after the close.
They're breaking now. Third quarter adjusted earnings per share, Carol, $1.88. The estimate had been for $1.72. So clearly a beat coming from Micron Technology in terms of adjusted earnings per share overall. And they're also seeing fourth quarter revenue, $8 billion to $8.4 billion. That again is ahead of expectations, Carol.
And Caroline, it's a name that's up about 13%. We have been focusing so much on the chip sector in particular, concerns about supplies. And what's interesting is BMO came out, they upgraded the stock earlier ahead of earnings to outperform, up the price target to 110 from 90 a share. And they said it's because of continued constrained supply environment into 2022. You can see the stock, though, down a little bit in the after hours. AMD, I just want to mention another chip name, moving closer to getting its deal done with Xilinx. We saw AMD up almost 5% in today's session. Xilinx also higher, up about 3.6%. Got to mention an IPO. We've had a fair amount of activity. We're talking about LegalZoom opening above its IPO price of 28, which was above the offering range. And you can see that stock WOA up 35% today, guys.
Yeah, on a daily basis, some of your decliners. Intel down for a second straight day here. Uber also taking a little bit of a leg down. That seems to be tied to the debut of Didi. Live Nation also down here. Interesting move that we're getting out of Spotify, that they may actually move into the live event space. They're saying it's mainly going to be about selling tickets and not necessarily putting on concerts, but this still provides maybe potentially some competition here for Live Nation. And Altimmune, not a stock we talk about a lot, but remember, this is one of the big COVID stocks that was in the race for a COVID vaccine. The studies that it was doing didn't really pan out, and that company now looking for other options here. Those shares down about 38% on the day. And real quickly, I just want to point out too, and going back to the previous point here, on a month-to-date basis, the types of names that you're seeing in the red here are pretty dramatic here. You're seeing a lot of the airline names down 12% here on a month-to-date basis. A lot of the biotech names also down here on a month-to-date basis. A lot of materials names down on a month-to-date basis. Remember, you go back through the first 4 or 5 months of the year, these were your leaders. That completely broke down here in the month of June here as a lot of people started to look for other opportunities and maybe, just maybe, Carol, even look for the exit.
I mean, Romain, talking and looking for the exit, talking on a month-to-date basis. I mean, when we look across the asset world to commodities, not everything has been faring so well. And you were just talking about some of the unloved areas in the equity segment. The unloved area of commodities has got to be gold. I'm looking for our radio audience at our GMM Global Macro Movers, and gold has been really underperforming. I think worst month it's had since 2016. But on a day like today, actually commodities have had a boost higher. This is interesting because dollar is actually stronger. So why? This is a story of the heat that we are currently facing here in the New York area, across the United States. We see, of course, natural gas prices skyrocket. Everyone using their air conditioning. Oil actually getting a bit up 0.8% ahead of the OPEC plus. Yeah, cranking up for Paul Mocha the cat for Taylor, trying to be a pet rescue kind of a person today. Brent crude is up 0.5%, but we see corn, soft commodities really ramping higher, hitting daily limits, as we of course are concerned about the heat, what that means for the ongoing corn shortage, of course, that of being a story of supply chain issues. We're looking across what that means in terms of the foreign currency noise, because actually, as I say, commodities higher on a day when the dollar is also going higher. This is your flight to safety. This is your worry about variance. This is why we saw European trading a little bit lackluster. We're seeing a dollar index up 0.3%. That means the Japanese yen is off by 0.5%. The Swiss franc is also lower. And I move into the world of sovereign bonds and money moving across the board into sovereign debt at the moment. This is your haven trade, Taylor.
It is into full faith and credit all across the curve here on 2s, 10s, and 30s. We catch a bid of about 1 to 2 basis points. Unbelievable. We're down to a 146 on 10s, a 208 on 30s. Let me remind you, on 10-year, we started the year at about a 112, peaked at a 174. We're now hovering maybe about halfway to 146. Same thing with the 30s. Started the year to 170, climbed up to 245. We migrate downwards to a 208. So again, sort of halfway in between everywhere that we've been this year. And Carol, this really kicks off a conversation of where we are. Are we tapering? Are we talking about tapering? Are we tapering mortgages? Are we just tapering treasuries? We heard from Governor Chris Waller saying that we're in a totally, completely different phase of our economic policy. It is really time to start thinking about pulling this back. And he's saying, I'm much more sympathetic to tapering MBS first. The housing market is on fire.
Well, the president of the Dallas Fed, Robert Kaplan, also kind of agreeing with that and talking about tapering sooner rather than later, even raising rates sooner rather than later. He caught up with our Michael McKee. Here's what he had to say.
I think it'll be far healthier to start soon and sooner rather than later. Why? excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
And that's for our radio audience, of course, seeing it on TV too. But the president of the Dallas Fed, Robert Kaplan, catching up with our Michael McKee, he said tapering should be done gradually. Yeah. People on notice the Fed taper is coming. It's just a question of when. As Mike McKee likes to remind us, we know it's going to be at 2 o'clock. We just don't know the day.
So, I mean, you fold into that, of course, looking ahead, of course, to what's happening, of course, with the jobs markets. We did get those ADP numbers. They were strong, of course, pretty much what people are expecting in that 600,000 range. That's about what people are expecting, of course, on Friday with regards to the government payrolls report. And that really folds into this idea of, I guess, the stickiness of inflation here. We talk a lot about the goods and services, but at the end of the day, this is really going to come down to perceptions about wage growth and how sticky those wages are.
Wage growth going up. I tell you what also is pretty expensive. You've been trying to hire a car over this holiday, July 4th. Thousands is going to cost you over at Hertz. Have you just noticed Hertz is coming out of bankruptcy? As of July the 1st, they could be trading under a new ticker. Do you remember how fast this stock ran on the back of its bankruptcy? This is the meme stock trade that we've been seeing on fire for the first half of the year. We ended up going to AMC and GameStop, but Hertz, noticing, of course, is coming out of bankruptcy, a much stronger company.
This is a big deal, too. And I mean, Taylor, you obviously were all over this, of course, because of the fixed income element of this. And the way, well, really, I mean, we talk about the meme stocks and we kind of make a lot of fun of some of these retail traders, but I mean, they in effect saved this company for better or for worse.
You know, you've seen this across the board, not only with Hertz, but like GameStop, like AMC, these companies being able to restructure, maybe issue some share sales, Carol, and really being able to shore up their company.
Well, guys, as you can see, I need to cancel the order to buy Bitcoin because it's already, as you can see, moved too far from the order I placed to buy Bitcoin. Okay, so please cancel your order for time being. Okay, and we will see. We'll see what's going to happen next. What we're going to do with Bitcoin next. We will keep an eye on Bitcoin. Okay.
The Stephen Colbert Show, Mavis Staples, of course, just a legendary singer.
I believe
and
he's
Carol,
over at the Colbert Show.
I know they're there. Believe me, I've been practicing for this. This is going to be the highlight of my day, probably the highlight of my year, Carol. And you've actually had the privilege of doing this, Carol.
It is a blast.
And it is a blast.
We've done it along the Esplanade on the Charles River. It is incredible. You're going to have so much fun.
Yeah, I plan to. And it's going to be at 8 p.m. Eastern time. I expect everyone to watch here. It's going to be, believe it or not, on Sunday, July 4th.
No.
As 4th of July. Spectacular. And it's going to, you're going to hear all the favorites, all the American favorites, all the great songs. A real salute, I guess, to this country and really to, I guess, what is effectively the birthday of this nation here. Going to be some great performances and really, I guess, just a great time here for the family and anyone who wants to check it out. Right here on all your Bloomberg properties, Bloomberg Television, radio.
Wow.
And probably on the internet. I'm glad you guys give me such a platform
I believe it's July 5th already. So good job, Romaine.
I think I have some herbal.
Have fun. Good luck. Break a leg.
We have time for that?
All right. That's going to do it for our cross-platform coverage on Bloomberg Radio, on Bloomberg TV, and on YouTube. We're going to be back same tomorrow, minus Romaine, I think.
Yeah.
Yeah, don't worry. You won't have me to kick around tomorrow.
At the same time and same place. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And you are listening to Bloomberg Business Week. Carol Masser, Micron Technology, it is out with its earnings, and we're seeing the stock bounce around a little bit in the after hours. I'm just looking at the after hours trade, now down about 1.3%. We're going to break into those earnings and make sense and the outlook with with Dan Morgan over at Synovus, who follows the chip sector. So we'll get to that in just a moment. I'm Carol Masser. You are listening to Bloomberg Radio, and this is Bloomberg Business Week. Let's get a check on world and national news. Over to Nancy Lyons. We go in D.C. Hey, Nancy.
Thanks, Carol. The House has just voted to form a 13-member select committee to investigate the January 6th attack on the U.S. Capitol. Nearly all House Republicans voted against it. Bill Cosby walked out of a Pennsylvania prison this afternoon after the state Supreme Court overturned his conviction. The court says his rights were violated when testimony he made in a civil suit was used against him in his sex assault trial. Victoria Valentino says she was one of his victims and says he should not be allowed to go free.
My stomach is lurching, and I am deeply distressed about the injustice of the whole thing.
Valentino calls Cosby a serial rapist. He served more than 2 years of a 3 to 10 year sentence. Officials say 4 more bodies have been recovered at the site of the South Florida condo collapse. Miami-Dade County Mayor Daniela Levine Cava said that brings the death toll to 16, with 147 people still missing.
Please join me in continuing to pray for those who've lost their lives in this unthinkable tragedy, and all of their families who are grieving, and all of those who are still waiting and waiting and waiting for news.
Cava says crews will continue their work to find the victims. Former Defense Secretary Donald Rumsfeld has died at the age of 88. He was the architect of the war on Afghanistan following 9/11. His family says he was surrounded by loved ones at his New Mexico home.
3, 2, 1, 0.
SpaceX has launched its Falcon 9 rocket carrying 88 small satellites for a variety of customers. Yesterday's launch was scrubbed just seconds before liftoff. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. We want to get a quick check on some of your top business stories, including earnings out from Micron. And Charlie, a headline just crossing with Texas Instruments, another chip company.
Indeed, Texas Instruments will be acquiring Micron Semi Factory for about $900 million. Turned out to be an up day on Wall Street. We begin there with the Dow and the S&P both higher today. In fact, the S&P ending the first half at a record. We have the S&P 500 index climbing by 5 points, up by about 0.1%. The Dow up 210, higher by 0.6%. Nasdaq fell 24, down 0.2%. But again, worth repeating, S&P ending the first half, ending the trading month of June, heading into July at a record 42.97, up 5 points today, higher by 0.1%. Nasdaq 100 index gained for a fifth quarter, longest run since 2018. S&P 500 up for a fifth straight quarter, longest run there since 2017. Solid economic data tempered concern about high valuations and the spread of a more contagious coronavirus variant. The S&P 500 index again closing at a record. 10-year yield right now 1.45%. 10-year up 4/30 seconds. Gold up 0.5%. 17.71 the ounce on gold. West Texas Intermediate crude up 0.8%. WTI 73.54 a barrel. I'm Charlie Pellicat. This is Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So a bunch of headlines when we want to get to our Dan Morgan, who covers this chip sector. He's Senior Portfolio Manager at Synovus Trust Company, really a go-to voice for us when it comes to semiconductors. He's got roughly his firm $23.5 billion in assets under management. He's on the phone from Atlanta. Dan, good to have you here.
Hi, Carol.
How are you?
Happy 4th.
Oh, my gosh, almost, right?
A couple days in advance.
I cannot believe we're here.
I know. Well, it'll be Christmas next time I get on with you.
That will be, or at least back to school or something.
Yeah.
Micron, it's up now about 0.6% in the after hours. We did see some selling initially. The company coming out with its latest earnings, they're also, I guess, selling a semi-factory to Texas Instruments for almost $1 billion. What do we need to know with this batch of headlines that just crossed?
Well, I mean, the first, initial numbers that came across, as you know, Carol, were all very positive. Third quarter revenue was $7.42 billion. That was above estimates at $7.22 billion. They also came out and said that adjusted EPS $1.88 versus $1.72. And then they also guided for the upcoming fourth quarter for both adjusted EPS and revenues of $220 and between $8 and $8.4 billion, which are both above consensus estimates for this upcoming next quarter. So everything looked pretty good from that perspective. But like you said, Carol, the stock kind of sold off, right? We got some news. Well, you talk about the TI selling one of their fabs for $900 million. I think what we can kind of pull away from this, though, Carol, is there's like a real division in the road right now with Micron Technology. I mean, if you talk to people who are bullish on it, obviously, you know, we know that everything is going very, very well right now in a lot of their core markets like cloud, smartphones. We had a big recovery in auto industrial. You know, we had a 55% jump in unit volume growth for PCs in the first quarter of this year. So you have all this great news, you know. Yeah. But then you have the bears saying, well, you know, there could be a lot of double ordering going on. And, you know, DRAM spot prices have jumped 50% in the last, 12 months. All the good news in terms of PCs is built in. So it's kind of interesting, Carol. It's kind of funny when I saw it come back. It's like, well, the reaction was kind of mixed, which has been what the reaction has been on this stock the whole time.
I was very surprised. And now it's almost flat in the after hours.
That
so
makes sense.
Well, so, you know, Dan, we've done this with you. We've done this, you know, certainly here at Bloomberg almost on a daily basis where we look at the chip sector. And you're right. You know, we know every chip company is not the same. But should we anticipate that we talk often about tight supply chains? It's going to be that way for a while.
You're right, Carol. We've had plenty of segments where we've delved into this. I mean, I saw some recent data that came out. This is about a month or two old, but it was saying that the chip lead times, which is the gap between ordering a semiconductor and actually taking delivery, is now up to 18 weeks. Now, it could have been a new number came in the last couple of days, but that was as of May. So, but it does give you an idea that this, you know, situation that you and I have been following really closely is definitely has been extended, right? I mean, I initially thought we'd kind of close this thing down, you know, in 2021, but it's probably going to go into second or third quarter of 2022. Just because of, you know, these issues that we've talked about before in terms of the capacity to build enough chips to meet the demand. And, you know, and everything's going bonkers right now, right? Cloud's doing well. PCs are doing well. We have the, 5G, iPhones coming out, and Samsung has their 5G phones. So you have all this increased demand for chips. And, you know, we talked the story before about, you know, what kind of led to some of these shortages. So that's still built into the environment right now. But, you know, overall, Carol, this Micron report was pretty good. I think the street's got to give them a little bit of slack here.
I know, like lighten up, everybody. Well,
ease up, will you?
You know, I like to, Dan, take a longer look at some of the major themes and trends that are out there. I mean, bottom line, everything we do has more and more chips in it. And I know, again, not every chip is the same, and so there's different demands, and we have to be smart about that in terms of how we look at different chip companies or whether it's a semi-equipment company and so on and so forth. But nonetheless, that's where our world is going. It's not like all of a sudden, unless we create something other than a chip, which I don't know what might be the next derivative of something like that. But having said that, the long-term demand metrics are going to be in place.
You're right, Carol. So it doesn't really matter. We have a little short. I mean, it does matter. We have a shortage now. We've been talking a lot about that. It's eventually going to work out, you know, in terms of capacity matching up with demand. But you're right. I mean, you look at automotives, you look at industrial, you look at toasters. You know, we have talked before. Everything's got chips in it that weren't there 25 years ago.
Right.
And on top of that, you know, we've talked about these bigger secular trends in technology, artificial intelligence. We've talked about the 5G rollout. We've talked about how big infrastructure as a service in terms of the cloud. So those are all areas that will continue to drive demand for chips. And, you know, Micron Technology, for our listeners out there that may not be as familiar with that company, they make the memory chips, right? They make the DRAM and the NAND that goes into all these products that we've talked about. And every one of these products has to have memory. And that's why they will always be companies like Micron.
So because we have a little bit of time and we've talked about the chip sector, you cover a bunch of tech names and tech companies. We've been talking a lot about Facebook hitting $1 trillion market cap, and Dave Wilson had a great chart earlier about how it got there pretty quickly compared to a Microsoft or an Apple, which took, I think, it was 37 years to hit and become $1 trillion market cap company. The tech space, when you look at it, you follow some old tech, some newer tech. How do you see it evolving? Who are the names that you think we're still going to be talking about 5 years from now, 10 years from now?
Well, what I've kind of witnessed, and Micron's been around forever, by the way, too.
Yeah.
But they haven't hit $1 trillion yet. But, you know, if you look at those FANG stocks, like you just mentioned, and of course you have the FTC and the DOJ, and we've talked before about some of the issues with them, but they have such dominant market shares. I think Microsoft hit $2 trillion, too, recently, which tied Apple, that it surpassed that number. And now you talk about Facebook hitting that number. So, I mean, they're just so dominant in their space. I mean, Facebook and Google are both doing extremely well right now because of the economy coming back on board. Everybody's starting to advertise again. A lot of small businesses advertise with Facebook. People don't realize it. They think it's the top Fortune, 100 or whatever. It's not. It's these small businesses. They're all coming online, so they're doing great. I mean, if you look at the advertising revenue for both Facebook and Google the last quarter, it was record. It was unbelievable, and they're become so big.
But the models, do you think they ultimately have to change because of the increased regulatory oversight? I mean, we're watching Europe so closely, right? Because Europe is a little bit tougher, and they really are the leading edge when it comes to what's going on. Do you think ultimately their business model will have to change?
They may tweak it to respond to some of the, congressional committees and the issues that they bring up. I just can't see like outright dividing companies up. I could see like Amazon backing off on, cross-selling third party. They look at what their third party are doing, and then they'll say, we've got a store that sells the same thing. Maybe you could respond to that and not do that and make your money somewhere else like an AWS. So I see these companies responding to the DOJ and the FTC and making changes to their business models, but I don't see a massive change up in breaking up some of these companies or changing what they're doing. I just see them modifying the way they do their business to meet the regulators' concerns. That's the way I view it.
Well, what about a name like Zoom that just came, to the forefront? It's been around for a decade, but thank you, pandemic, that all of a sudden it became ubiquitous. And now we're all talking about or trying to figure out, does it still continue to be a big part of our society, depending on the CEOs that you talk to about whether or not they'll be hybrid working or working from home or whether they want everybody back to the office. It's hard to kind of gauge. How do you play a name like Zoom that just took off last year, but we're still trying to assess, was it just a pandemic play or is it something longer?
Yeah, so Zoom's interesting, Carol, as you know, because you've had an influx of competition coming in.
Yeah.
More specifically from Microsoft. You probably saw it. They're just coming out with their Windows 11, and now Team will be integrated in Windows 11. So I'm a little fearful, and just because I've been doing this for so long, I can remember any time that Microsoft got into something, and I can name off the names. These are names: Netscape from way back when, Quattro Pro.
There are people like,
wait,
what was that?
Don't date yourself, Carol. But anyway, whenever they get into something, it's not usually good for the company who actually created the technology that did so well. So Zoom to me would be something I might be a little cautious on, just because they've had such a great, as you said, because of the pandemic. Now people back to work, back in the office, start to slow down. They're still a part of our, makeup, but it's not going to be the same pickup we saw before. And then you've got Microsoft coming in, and the record with Microsoft isn't good for the small guy.
Hey, one last thing. Just got about 30 seconds left here. You cover Uber, you cover Lyft, you talk about them with us. Didi, the Chinese ride-hailing app, ADR is making their debut here in the U.S. Stock ended up about 1% in today's session, well off its highs today. Any thoughts on that? And just got about 30 seconds.
Well, Carol's out like Lyft and Uber. We don't have any profits. We got a lot of revenue growth. Yeah, so those stocks
you don't sound enthused.
Well, they haven't done as well recently, along with Airbnb and Snowflake. They're companies that came out, had bonkers, in the initial public offerings. Everybody got really excited, and then we start to grind through the model, and we keep looking for profitable EBITDA. We don't get it, so I guess we'll have to just do another wait and see on this, like we have with Lyft, Uber, and some of the other names we talked about.
Next earnings round should help with that one. Airbnb, by the way, just up about 4% so far this year. Dan, you are a champ. Dan Morgan of Synovus joining us on the phone from Atlanta. Micron, which we started talking about, it's just up about 0.4%.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So yeah, I'm going to say it. We've got lots of problems as a world, whether it's climate change, whether it's food insecurity, whether it's inequalities. We talk about it all the time. So our next guest has been working on these kinds of problems, with thinking at it with public-private partnership in mind. She's got a new book out called Solving Public Problems, a practical guide to fix our government and change our world. Beth Simone Novick is going to be with us in just a moment. First up, let's head on over back to Charlie Pellet with a check on the day's headlines. Hey, Charlie.
Lots going on. Let's begin with Micron Technology. It forecast adjusted EPS for the fourth quarter, and that guidance did beat the average analyst estimate. Adjusted EPS of $1.88 in the third quarter. Estimates were for $1.27 after hours. Shares of Micron up now by just about 1.9%. The first half of 2021 is behind us. Let's begin with the year-to-date standings. At halftime, we've got the S&P up by 14.4%. Again, that's for the first 6 months of the year. We're closing the books on June, moving on to the trading month of July. The Dow up today by 210 points, up 0.6%, extending its year-to-date gain to 12.7%. NASDAQ, a losing day there, down 24 points, down 0.2%. So far this year, up by 12.5%. Today, by the way, the S&P was up 5, finishing the month and the quarter at a record at 42.97, up today by 0.1%. 10-year up 2/32, 10-year yield 1.46%. Gold up 0.5%, 17.70 the ounce. And West Texas Intermediate crude up 0.8%, 73.53 a barrel. Now, what about the Federal Reserve? Margie Patel is senior portfolio manager at Wells Fargo Asset Management, and she was interviewed right here on Bloomberg Business Week.
Overall, they are really committed to the same course they've been on, which is keeping short rates anchored pretty near zero, continuing to buy securities in the long end. And I don't think they're going to waver from that policy. They continue to feel inflation is transitory, and as long as they feel that way, that's what's going to determine monetary policy, and says the markets will continue to move up.
First day of trading for Chinese ride-hailing giant DiDi Global did rise as much as 29% in its trading debut today. Shares finished the session up by 1%. Again, recapping, S&P ending the first half at a record up 5, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And a headline just crossing the Bloomberg terminal, the NCAA board approving the name, image, and likeness policy. Of course, this has to do with college athletes increasingly having more say and being able to make money off of what they are doing. So again, just a little bit of a headline there. All right, let's get to it with our next guest. Our loyal followers know that we love talking about innovation and disruption impacting our world, our investment world in particular. Our next guest has spent her career looking at innovation too and how it intersects with government. I've been looking forward to this. Joining us right now is Beth Simone Novick. She is the first Chief Innovation Officer of the state of New Jersey. She was the U.S. Deputy Chief Technology Officer for Open Government and led President Obama's Open Government Initiative at the White House Office of Science and Technology Policy. She's got a new book out. It is called Solving Public Problems, a practical guide to fix our government and change our world. She is on the phone in New York City. Beth, welcome to Bloomberg Radio.
Hi, Carol. Thank you for having me.
It is so great to have you here. We do talk a lot about innovation and disruption, not just from an investment perspective, but how it is either improving the livelihood of individuals and citizens around the world. Tell us about your background and how it set the stage for this book.
Oh, well, my background, I have been both a professor of engineering and a professor of law, and I've had the pleasure to serve in government both at the federal level and now at the state level and work with international governments around the world in my capacity as director of the GovLab. And that's where we've gotten to see, and especially something we've all witnessed now during COVID, we've gotten to see countless failures and bungles, really the problems that happen when government doesn't work well. But at the same time, we've gotten to also see a lot of successes, and we've come, I think, to really realize how important it is to really have government that works. So in my own background, especially when I was in the Obama administration, we got to see how much of a difference it made when people started to do things like use open data, which we were putting online for the first time to help solve problems in a more evidence way. What it meant to actually use new technology to then go out and engage with citizens, to use what some people call human-centered design, to really ask citizens about the problems that we're facing and how we can deliver services that work for them better. It's something that we now do regularly in our work in the state of New Jersey.
Right.
So we really got to see about what it meant to work differently and how important those different working practices are to innovating and to improving how we solve problems.
So, Beth, I have to ask you, as a member, me, as a citizen of the United States, as someone who has lived in New Jersey her whole life, I have seen a fair amount of dysfunction in government. Does government work right now? And if it doesn't, in your view, or are there ways that it could work better in your view?
Well, again, there are lots of success stories that I can tell you. But at the same time, regardless of those stories, most people today feel that government is a clumsy, bungling giant that is not in a position to spend its money well, as we stand poised today to have one of the largest federal budgets since World War I, really. I think all of us are very concerned about how government spends our money. And, that's reflected in the poll numbers, which over, not just since COVID, but over a generation have seen declining rates of trust in government. So as many things as are going right, and we're all looking around us as New York and New Jersey are reopening, obviously, and we're all happy, maybe not to be out in the heat today, but happy to be able to leave our houses at least, and go to a restaurant and whatnot. We see the benefits again of when things work, but we know that they could work better than they're doing today, and especially we know that we need to take advantage of the tools we have available today: big data, new technology, human-centered design, again, innovations in ways of working that we need to adapt and adopt in order to do a better job at solving problems.
Well, does the pandemic and everything that kind of how it played out, and obviously this was in many ways a black swan event, but nonetheless, the inequities that were laid bare once again, there weren't new problems. Is that an indication that government hasn't been working as well as it could, that we still have such incredible gaps in our society? We've got about 40 seconds and then we'll come back and talk some more.
Absolutely. So I think COVID brought a lot of this into relief, but the acute challenges we saw during COVID, whether it was the public health crises, exploding unemployment, rampant racial inequity, just amplify the long-term and chronic inequalities we've been seeing, whether it's climate change or whether it's economic inequality. We have tremendous challenges ahead of us that we need to do better at fixing. So as well as we might have done things up until now, and that's a debatable point, we really need to do better if we're going to respond to the tremendous crises that we're facing.
All right, Beth, sit tight for a second. We're going to do a little bit of news, then we'll come back. We are talking with Beth Simone Novak, Chief Innovation Officer for the state of New Jersey, former Deputy Chief Technology Officer. She did that during the Obama administration, and her new book that's out, Solving Public Problems, A Practical Guide to Fix Our Government and Change Our World. She lays it out, but she also gives advice on how to make those changes and help our world. Let's get back to world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. After Republicans blocked a proposal to create a bipartisan committee to investigate the Capitol riot, the House today narrowly passed a bill to create a select committee to look into what happened. 2 Republicans joined the Democrats in support. Democratic Congressman Jim McGovern of Massachusetts says it's important to uncover what happened.
Now, they may have delayed uncovering the truth, Madam Speaker, but, Madam Speaker, the truth will not stay buried forever. And that is why we are here today, because the facts matter. A select committee will finally get to the truth about the events of January 6th.
McGovern says the committee is modeled after one that was impaneled by Republicans to investigate the attack in Benghazi, and it does have subpoena power. Donald Rumsfeld has died. He was the defense secretary who became the face of U.S. foreign policy under President George W. Bush. He orchestrated the war on Afghanistan after 9/11. He was 88. Bill Cosby is now a free man and back at his Pennsylvania home. He was released from prison this afternoon, not long after Pennsylvania's highest court vacated his sex assault conviction. The court said the DA violated a previous prosecutor's agreement not to prosecute Cosby. The opinion said the only remedy was to discharge him from prison and bar any future prosecution on the charges. Janice Baker Kinney says she was one of his victims. She was assaulted when she was 24.
So many women have told their truth
and this serial rapist gets to go home today is just stunning to me.
Cosby has served 2 years of a 3 to 10 year sentence. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser. Joining me right now is Charlie Pellet. Charlie, I just want to clarify. I kind of stumbled through a headline here, and I want to clarify. The Division I Board of Directors voting to approve the interim name, image, likeness policy. This is according to The Athletic, putting it out, citing an unidentified source. College athletes in all 50 states will be able to monetize their names, image, and likeness. That would happen starting tomorrow, July 1st. And, of course, this comes off of that ruling about the Supreme Court allowing more athletic compensation. So it's interesting. It continues to move along when it comes to collegiate sports.
Indeed. And another story that I just want to touch on very briefly here, Carol Master, is that we have got a heat wave underway here in New York City. The heat is on today, and New York City urging all homes and businesses to conserve power to avoid outages as the heat wave peaks.
I know my phone went off in the last interview, or at least when I was talking with Dan Morgan over at Synovus. It was an alert, and it was basically, urging everyone to cut back on their power, limit their energy usage to prevent power outages because of the intense heat. I know it's been incredible. We've been talking about this with the Pacific Northwest, right? Unusual heat, but we are definitely seeing it here on the East Coast as well.
Indeed, and specifically in the Pacific Northwest. I mean, sometimes you see these stories come by, and then what you do is you stop and you do a double take, and you're talking about temperatures of roughly 114 degrees in places like Portland or Seattle, and you say, no, that can't be. You go back, you check the numbers, and absolutely right, that's how hot it was getting.
Check this out. A little perspective. Lytton, British Columbia. It's a region of glacier-fed rivers, reached 121 degrees. British Columbia reporting about 100 more deaths than normal since the heat wave began. Charlie, it's just another sign of erratic climate that we have seen and erratic weather in different parts of the world.
Indeed. British Columbia, 121 degrees. I mean, if that was in the Mojave Desert, that's one thing, but we're talking Canada here.
Yeah, exactly. All right. Anyway, a reminder in New York City to limit your power usage to avoid those outages. Charlie, thank you so much. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Huddleford, keeping an eye on Micron Technology shares after hours up now by roughly 1%. Micron is the largest American maker of memory chips, and it's out with a revenue forecast for the current quarter that was in line with analyst projections, indicating solid demand for semiconductors that store data in computers and phones. We have wrapped up the first half of 2021. It is on to the new trading month and indeed the second half. So far this year, the S&P has advanced 14.4%, today up 0.1%, higher by 5. The end of one of the best first halves since 1998 for U.S. stocks was marked by small moves and slow trading. The Dow up 210, up 0.6%. NASDAQ down 24, a drop of 0.2%. 10-year yield 1.46%. Gold up 0.5%. 17.69 the ounce. West Texas Intermediate crude up 0.8%. 73.55 a barrel. I'm Charlie Huddleford. This is Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. We're talking with Beth Simone Novick. She is the first Chief Innovation Officer in New Jersey. She was the U.S. Deputy Chief Technology Officer for Open Government. That was during the Obama administration. Her new book, Solving Public Problems, A Practical Guide to Fix Our Government and Change Our World. There's a lot here, Beth, and I do wonder, one chapter, I just love the headline of it, The Government That Governs Least Governs Best. Is that an argument for smaller government, or just more effective government, or government with real leadership, or a little bit of both?
You're onto exactly what I'm getting at. We've had a generation-long debate about bigger versus smaller government. I think that's really a red herring. It distracts us from the idea that we need to have better government, and frankly, not just government. It's business, it's activists and students and every one of us, as well as our government, that needs to really develop the skills, I would argue, for being more effective at solving public problems. So a lot of us these days really want to, man the barricades. There's a lot of demand for social change, but I think the ability to go from demanding change to really making it happen, to cross that chasm from idea to implementation, is something that I think a lot of us find very difficult wherever it is that we work, whether it's in the private or the public sector.
Well, when you look at something like climate change, we talked earlier with Sarah Manker. She's created this company called Grow Intelligence, and she was a former commodities trader. She's a Bloomberg New Economy catalyst, and she basically is gathering tons of global data using AI, machine learning, to tackle things like food security issues and climate change, and her customers are food suppliers, food producers, governments, the financial world. These are some really big problems that if we don't tackle, we're all going to be not in a good way. So I do wonder about, in particular, I guess what I wanted to ask you was the use of data, smart data, to get us to a better place.
Absolutely. I think, every day we were glued to the television screen or the radio to hear, the governors or the mayors of our communities show the graphs with rates of COVID and how transmission was progressing. If we didn't know about the value of data before, we definitely, I think, all understood it during COVID. But if you look around and look at the fact that the top 25 schools of public administration do not require the teaching of data science, if you look at the fact that in government, we have the majority of our government, only 5% of people are under the age of 30 in our civilian government. So if age is any proxy for mastery of new technologies, digital skills, big data, we really are, I think, lacking in the way that we're training and teaching people to use these new tools that are available to us. Our training law in government dates to 1958, our training framework.
Sounds a little old to me.
There's a need for a refresh and really looking at what are the skills that we're teaching people inside government. But it's not limited to government. Look, in universities, we're teaching people to become the next Mark Zuckerberg. We're teaching everybody to become entrepreneurs and how to start a business, which is wonderful. But we also need to equip people with the skills who want to do things like tackle climate change or tackle racial inequities or tackle some of these big societal problems, and all the more so really in business. So, today I think CEOs really know And the Edelman Trust Barometer shows it. You know, people want CEOs to speak out on societal issues. They want CEOs to be accountable to the public. The new movement around stakeholder capitalism really is a movement towards companies playing a more socially responsible role.
Right.
And employees, frankly, are demanding it. You know, millennials, who are the people going into the jobs of both today and tomorrow, 64% of millennials are considering a company's social and environmental commitments when they're deciding where they're going to go to work. So I think there's a real need for people also in the private sector to upskill themselves to be able to tackle societal problems, because it's everybody's responsibility, not just people inside government.
It's funny, we just had Richard Edelman on because we often talk about the Trust Barometer, and you're spot on. What's also interesting, and having recently talked to a bunch of CEOs that are in the food space, leading companies, they are definitely watching climate change because it's impacting them and their businesses. Is it ultimately, you know, I have worked in a capitalistic society. I cover the capitalism that goes on globally. Is it money that ultimately brings about the change? Because I feel like we've been talking about climate change for a long time. We've been talking about diversity for a long time. But finally, it feels like the needle is changing, partly because it's having a financial impact on companies, on cities, on states, on governments, on countries.
Absolutely. Well, look, we can always use more money put towards social good, but right now we're seeing, you know, the largest federal budgets in a very, very long time. We're seeing companies also wanting, especially during COVID, we saw a lot of corporate social philanthropy, social responsibility, people spending money on trying to do well by doing good. I think it's really a question, though, of skills and of know-how and the ability to understand how to leverage the tools at our disposal. And that includes both digital tools and data, but also includes institutions and how we can leverage institutions and their power and their convening power to really implement change. You know, when we talk about innovation, a lot of the focus is on the spark of the good idea.
Right.
So you talk about the social entrepreneur who has this cool new app or this cool new thing, but the real question is driving through implementation. How do we make change happen in practice? How do we go again from the good idea to implementing that good idea? How do we take these amazing new technologies around machine learning and AI and translate them into social good in practice for real people? That's a skill set, and it's a learnable skill set, is the argument that I make.
I love what you're saying. I feel like I've been having this conversation a lot lately, especially in the last year, but also for a little bit longer. Like, these are all great ideas. They make sense. Someone, a loyal listener and watcher on our YouTube channel, tweeting at me and saying, better government begins with better people running for public office, country before party. Isn't that part of the problem? And just got about 40 seconds left here.
Well, we're going to solve it all in 40 seconds, of course.
But you know what I'm saying in terms of politics keep getting in the way of kind of some really smart and needed and necessary longer-term planning. Just quickly.
Let me just say I'm so glad we're having this conversation, because so much focus is obviously on what happens on Election Day, and not enough is what happens the day after Election Day. What are the skills we're developing? What's the capacity that we're building? Are we upskilling ourselves to be able to tackle the challenges that we're facing today? So it really is about, first and foremost, focusing on the problems that we're solving and not on the politics around those problems.
Well, I hope you will come back. Beth Simone Novak, Chief Innovation Officer for New Jersey. Her book is Solving Public Problems, a practical guide to fix our government and change our world. Beth, thank you so much. All right, Joe Matthew is coming up on Sound On. Joe, what's on tap?
Carol, it's always an event when Washington tries to get into crypto.
No.
Yeah, and they try it again today. We've had an ear on a hearing that went on for quite some time as they talk about the need, according to some, to regulate crypto. We're going to talk about it with tech futurist Kathy Hackle coming up on Sound On.
Maybe they should ask Tom Brady and Giselle about that.
They're investing.
They are indeed. All right, have a good show. Joe Matthew with Sound On. That's coming up in just a few minutes right here on Bloomberg Radio. For the whole Bloomberg Business Week team, I'm Carol Massar. Have a good and safe evening. We'll see you tomorrow.